For many months now, the world has been splitting into two camps. We have the Western powers and the global South. The Middle East has been quietly playing both sides, we know that, but it's getting really obvious who they are starting to choose. In our lead story today, Putin's Gulf visit defies efforts to isolate him over the war. He'll be meeting Saudi's MBS as well as heading to the UAE. Now, these are key players in OPEC and the richest nations in the Gulf, but more importantly, they are strategic partners with the United States, and now they are breaking away. The Israel war has consequences, and the longer it continues, the more influence Biden will lose over the region. Because the US keeps giving Israel diplomatic cover, there's a big power vacuum forming which Russia and China will capitalize on. Putin will be meeting MBS and Sheikh Mohammed to discuss a whole range of issues. This will include trade, the Israel military campaign, Ukraine, and the oil market. And this is a clear sign that Russia is far from being isolated in the world. They still have strong relations where it matters the most, the big oil producers who can really swing the global markets. And there's a big reason why they're welcoming Putin is because Russia's economy is still strong and they are defying Western sanctions in a remarkable way. Moscow's proceeds from oil has stayed roughly the same over the past 2 years at around pre-war levels. Even if we discount the big spikes in revenue, nothing has materially changed. The sanctions aren't really working. The world's still buying a ton of Russian oil and gas. Money is still flowing into the war coffers, and that's keeping Russia in the fight against the West. And it's not just oil, the country is a big agricultural exporter too. Russia to keep grain export quota high after another bumper crop. They are now the world's number one wheat exporter, and their prices are extremely sharp compared to other exporters. We can see Russian wheat prices are significantly lower than other exports, especially from the United States. This is actually helping the world deal with food inflation by depressing wheat prices. Ukrainian grain has been disrupted, and the Black Sea deal won't come back until the West lifts sanctions. Putin now has a dominating position when it comes to wheat. Russia is expected to export 46 million tons, putting it in the first place. That's more than Canada and Australia's exports combined. This is an enormous level of control Moscow has over the global food markets. The West can't isolate Russia from the world because they control all the commodities that the world needs, right? If Putin takes Russian oil, gas, and wheat offline, then prices will all spike. We'll be plunged back into an inflation nightmare. And this is a key reason why the Middle East they are embracing Putin. The Russian economy has not collapsed. It's much more resilient and can withstand sanctions for years and even decades to come. But what's concerning to the Gulf is the oil sanctions from the US. There's a reason why Saudi Arabia and the UAE applied to join BRICS, and that's because they know the demand side is equally as important as supply. You can pump all the oil you want, right? But if you get sanctioned by the US tomorrow, your economy will take a big hit, especially if you're the Saudis who are spending a ton of money. Just a week ago, the US told the world something quite shocking. They plan to halve Russia's oil and gas revenues by 2030, and this means the sanctions will persist at least for 6 more years. The oil price caps and dollar sanctions will become a new normal. The goal of these sanctions is to change Russia's behavior and to prevent them from rearming. But that isn't going to work. But what it has done is to shift the Middle East closer to Moscow. Now, I'm sure a big part of the meeting will be around the Israel-Gaza war. We know the Saudis and the region, they want to cease fire. They've been coordinating with the Chinese, with BRICS to end the conflict. But the bigger issue here is to keep oil prices high and coordinate for more production cuts. Remember, the higher the price of oil, the longer Russia can fight on and the richer the Middle East will get. And when it comes to OPEC Plus, Saudi Arabia comes in at 9 million barrels a day of production, while the UAE stands at 3 million. But just look at Russia's production. It's nearly 9.5 million barrels a day, making it the top dog in OPEC Plus. Russia's Novak has mentioned that more cuts might be coming after last week's action. According to him, if current actions are not sufficient, OPEC Plus countries are ready to take additional steps to eliminate speculation and volatility. But before you think there's no more room to cut, there absolutely is. The amount of volumes they control is staggering. As a group, they control the majority of global production, and just OPEC alone dominates 60% of the global oil exports. So if you throw in Russia and the other plus countries, you probably get around 80% of global exports. But here's what's interesting. Remember that Russia will be talking about trade deals with Saudi Arabia and the UAE as well. it's going to be likely that the discussions will revolve around selling oil outside of the dollar in local currencies. Basically, the kingdom could price oil in rials while the UAE sells in dirhams rather than the reserve currency. And this allows them to sanction-proof themselves and might be the final slap to Washington over the Israel war. Remember, diplomacy doesn't work. Military action is impossible. So de-dollarization might be the final straw to wake President Biden up. And this isn't a fantasy. The UAE has officially sold oil to India outside of the US dollar a few months ago. They were paid in Indian rupees, so bilateral trade using local currencies has already been done. There is a precedent set. As long as you have a trade surplus with a country like India or maybe China as well, meaning you buy more than what you sell, as an oil exporter, it makes good sense to transact in local currencies. You save on costs, and if the dollar gets weaponized against you, trade won't suddenly just stop. While Russia is expanding their influence, things aren't looking that great in the West. And let's focus on Germany for a bit because deindustrialization is getting from bad to worse. And we kind of know the basics, right? No more cheap Russian gas means industrial collapse. You can't compete with other manufacturers, especially when the world is slipping into a recession. Prices do matter today. And if you are hoping for this to be just a temporary slump, chances are you might be very wrong. German industries have been contracting for too long and companies are starting to throw in the towel, and they're throwing it in a big way. From the FT, German companies cut investment plans as economic gloom deepens. To no one's surprise, many energy intensive companies are considering relocating operations abroad. When your local energy costs are leagues higher than the rest of the world, you start losing industrial capacity. You don't need to be a genius to figure that out. German companies across the board have decided enough is enough. They have cut their investment plans to a near halt across all sectors. Services and manufacturing investments are starting to collapse. But check out the green line representing retail companies. That has gone below zero, which shows investments are negative. Companies are either pulling out or they are winding down. This tells you that domestic demand is also taking a big hit. The problem with companies investing less is a deadly spiral towards irrelevance. As Germany deindustrializes, other countries are taking their market share and investing more. This makes German companies less competitive over time and locks them in a limbo of economic stagnation. According to a recent survey by the German Economic Institute, it recorded a total collapse in business confidence. They surveyed over 2,000 companies and the results reinforced the end of an era. Only 23% of companies were optimistic about next year, while 35% had negative expectations. The biggest collapse came from the construction and industrial sectors. This is to be expected because the cost of raw materials has risen and they are highly energy intensive industries. While Germany is still in a state of economic shock, their misery is happiness for countries with access to cheap energy, countries that have refused to decouple away from Russia. And let's use Hungary as an example. Since the start of the Ukraine conflict, Viktor Orban has maintained energy relations with Moscow, and because of that, they have some of the cheapest energy prices in Europe. Hungary has officially the lowest gas prices in Europe, paying only 3.4 euros per 100 kilowatt hours. That's 6 to 7 times lower than countries like the Netherlands and Sweden. It's this disparity that's shifting industries from Germany to Hungary. Plus, Hungary has a very pro-trade policy with China and Russia. So if you're an investor, you choose Hungary because you get cheap energy, plus an open export market. You can easily sell stuff to the Russians and the Chinese. And that's why we have all these crazy headlines of Chinese companies flocking to Budapest. China's setting up a $1.5 billion cathode plant in Hungary. The biggest EV manufacturer in the world, BYD, is also about to build their first European factory in Hungary. China's investing in the country because manufacturing there is a lot cheaper than the rest of the Eurozone. And speaking of financial collapse, things aren't looking good for America either. The US has given Ukraine more than $100 billion in aid, but that isn't enough to win the war. They need to pump more and more money into the conflict, and we know things are getting desperate when the US Treasury itself is begging Congress for money. In a story from Bloomberg, Yellen appeals to Congress as Republicans block fresh aid to Ukraine. The Republicans are sick of funding Ukraine, but Biden needs more money for Zelensky. And we are seeing a big chasm tearing Congress apart because you can't keep throwing money to fight the Russians forever. It's a black hole, it's an endless pit that is yielding little results. The White House has warned that the US will run out of money for Ukraine by the end of the year, so Biden is seeking another $61 billion for Ukraine. But here's the scary thing, they might actually get the money at the expense of the US economy and the taxpayer. If Biden gives the Republicans their border policy, aid could flow in by the end of December. And I'm quite confident that aid will continue flowing to Ukraine because of the sunk cost fallacy. If aid suddenly stops, war spending that contributes to GDP will drop. Plus, the reputation of America standing by Ukraine forever will be destroyed. And if we listen to Zelensky's recent speech, I think it's quite an effective scare tactic. If resilience fails today due to a lack of aid and shortages of weapons and funding, it will mean that Russia will most likely invade NATO countries, and then the American children will fight. So let's operate on the basis that money will keep flowing to Ukraine. Another $60 billion will be borrowed by the US Treasury to fight the Russians. Borrowing more money for war spending just complicates the inflation fight and weakens the economy. Now, the whole world is expecting the Federal Reserve to cut interest rates to stimulate the economy once again, but there's a big problem that even Powell is warning us about. He's signaling that rate cuts are premature, and if inflation reignites because of fiscal policy, he could continue the hikes once again. Understand what war spending is all about. It's about spending money to blow things up without increasing the supply of goods and services. You are consuming more commodities and energy, which puts upwards pressure on inflation. At the same time, you are draining the world of money when you sell bonds to raise the amount. This is going to keep yields high and lock up more liquidity in the system. The longer term consequences are just as bad. America now has to choose between adding more to the national debt or risk losing the war. And according to the Brookings Institute, constant war spending is pushing US deficits to new heights. The official deficit for America has increased from 5.4% of GDP in 2022 to 6.3% this year. If adjusted for student loans, the number is closer to 7.5%. And that means the US is borrowing more and more money relative to the size of its economy to keep things running. The problem here is borrowing that keeps yields high, which makes the debt even harder to service. US interest payments have already crossed $1 trillion a year. That's more money that has to be borrowed into existence to settle the current debt payments. And if you think it can't get any worse, it absolutely can. A whopping 7.6 trillion in public debt will have to be rolled over into new debt within a year. You're talking about 31% of all outstanding US government debt being refinanced at a higher rate. This alone adds tremendous pressure on yields, which keeps them higher for longer. According to the Federal Reserve, the majority of the debt rolled over will be in the form of one-year T-bills. They will be rolled over at a 5% yield. So if funding to Ukraine comes, Yellen has to choose which treasury she wants to really sell. If she sells short-term bills, she compounds the US debt problem by pushing short-term yields even higher. But if she kicks the can down the road by selling 10 to 30-year bonds, she will lock in high interest rates for decades to come. So this is a no-win situation. The net interest cost in 2023 is already 2.5% of GDP. Forget about paying off the principal, guys. The higher this goes, the more debt has to be issued in the future to service the current payments. In fact, the CBO expects this number to hit 6.7% in 30 years. We'll be reaching a big turning point where either two things will happen. To rebalance the debt, either the US government will cut spending and plunge the US economy into a recession, into a depression, or they'll activate the Federal Reserve and they start printing money all over again. So we have to watch what happens in this economic war. The longer this drags on, the faster we'll reach an eventual default, and it's just a matter of time before the bigger implosion happens. But let me know what you think in the comments below. Is the Middle East moving closer to Russia? And will Joe Biden give Ukraine even more money? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.